Hi, Ron Benning, back with a Sacramento Duplex Market Update for the period ending December of 2024. I will look at the key local and national market trends, and I will tell you the target GRM that will break you even, making finding the best duplex deals dramatically easier. Developing trends leave evidence. If you want to know what's likely to happen over the next month or two, watch to the end. December 2024 was a seller's market for duplexes in the Sacramento market. We currently have a 2.8 month supply of duplexes on the market. This is down from 3.8 month supply last month. We are seeing a 4-month downward trend in the number of active duplex listings in Sacramento, with the inventory level down about 11.6% since last month. After several months of falling closed sales, we saw the closed duplex sales go up from 20 to 22 in December, which was a 10% increase. I just completed my fourplex market analysis this morning, and unlike the fourplex market, the sharp increase in interest rates over the past few months has not affected the duplex sales as much as it has the fourplex market. Why is this? I think this can be explained by the fact that the Sacramento duplex sellers have been aggressively adjusting their asking prices downward for the past 8 months. As you can see by looking at the chart, the average list price has come down by almost $90,000 in the past 8 months, while at the same time, the average sold price has been somewhat static. This has led to a market that is almost perfectly in balance, which is when the average list price and the average sale price converge. Let's take a look at what has been happening in the mortgage market. Like I mentioned earlier, interest rates have been going up for the last few months. In fact, despite the Fed's 0.75% rate cuts in September, rates are actually higher now than they were in September. For each 0.5% change in the interest rates, the buyer's buying power changes by about $20,000. This means that the average buyer has lost about $10,000 in buying power over the last 30 days. The National Association of Realtors anticipates mortgage rates will stabilize in 2025, and AR's chief economist expects the Federal Reserve will cut its interest rates, with mortgage rates bouncing around between 5.5% and 6.5%. This translates to a 67% multifamily rate. Let's take a look at how the current rates affect the target GRM for a break-even for a duplex with 25% down. The current break-even GRM is 11.4. This is down 1.2 times the annual rents from last month. This shows just how much of a difference even a 0.5 percentage point in the interest rate makes. In December, the sold price as a percentage of original asking price was 97%, which means that the buyers on average have a 3% bargaining power. With the current asking GRMs typically 2 to 3 points higher than the break-even GRM and so little bargaining power, it's clear that most investors will have a very difficult time finding a duplex with a break-even cash flow with 25% down. The average days on the market for sold duplexes was only 19 days this month, one more than last month. Properly priced duplexes are selling fast. More importantly, for the unsold inventory, the average days on the market is down to 52 days from 88 days the previous month. This was the result of 32 properties exiting the market by expiring unsold or the listings being canceled. If you're enjoying this analysis and you're not already subscribed to this channel, please subscribe now so that I can keep you informed about everything happening in the Sacramento investment market. It is rare that we see a market that is so evenly balanced. Right now, if I was to guess about what is likely to happen in the next few months, I would say you could almost flip a coin. The duplex market could go either way. I'm making a prediction that rates will be stagnant over the next month or two. If that is the case, I predict inventory will likely go up a bit over the next 30 to 60 days. But I don't really see any major market changes over the next 60 days. I'm optimistic that we will see a slight easing of interest rates over the next 12 months, but I'm not holding my breath for any significant reductions anytime soon. For potential sellers, it's really pretty simple. Just price it fairly and it will sell fast if your rents are at fair market value. Otherwise, you're going to need to discount your price a little bit for low rents. If rates go up, I see more downward pressure on asking prices though. If you want a rent analysis or an update on your property's value, give me a call or look for the link down below in the description to get those free services. For buyers, let's target those duplexes that are closest to the GRM break even and those properties that have been on the market for a long time. But I wouldn't be expecting prices to come down dramatically over the next few months, if at all. Whether you're thinking of buying or selling in the next 7 days or 7 months, feel free to call me, text me, so that I can answer your questions and I will help you plan a smooth purchase or sale transaction.